You think faster trading means more money? You are wrong. Dead wrong. And this belief is probably why you stubbornly keep trading lower time frames. Let me tell you something that will either save your career or make you so uncomfortable you close this video. The 5-minute chart is not a technical choice. It is a biological trap. And every time you open it, you are not analyzing the market. You are feeding an addiction. Your amygdala, the primitive part of your brain responsible for fear and excitement, lights up like a Christmas tree every time price moves. Your cortisol spikes, your heart rate increases, and your prefrontal cortex, the part that handles logic and long-term thinking, shuts down. This is not trading. This is your nervous system hijacking your decisions. You are not making rational choices. You are reacting to hormones, and the market does not care about your hormones. While you are busy chasing the next dopamine hit, it finds a way to take your money. I spent years watching traders, successful ones, struggling ones, the ones who made it, the ones who quit, and I noticed something that changed everything I thought I knew about time frames. The professionals, the ones who survived decades in this game, almost never trade the 5-minute chart. Not because they cannot, but because they understand something amateurs refuse to accept. Speed is not an edge, patience is. And the 4-hour chart is where patience becomes profit. Let me show you exactly why. The statistical filter, noise versus structure. The lower the time frame you trade, the higher the chance the market manipulates you. And the lower the time frame you trade, the less time you have to make decisions. Your likelihood of being impulsive is high. Naturally, you break your trading discipline frequently, yet if you traded your current strategy not on the 5-minute chart but on the 4-hour chart, maybe everything would change and you would become profitable very easily. I know trading lower time frames sounds more attractive, but are we trading for fun or to make money? Are we trading to satisfy our impulses, or do we see trading as a serious business? Meet Marcus. 32 years old, he had been trading for 4 years. He was smart, disciplined, he had a solid strategy, and he was trading the 15-minute chart. His win rate was 72%. Impressive, right? Most traders would kill for a 72% win rate, but Marcus was barely breaking even. How? Some months he made a little, some months he lost a little, but he could not grow his account, and he could not figure out why. So we ran an experiment. I told him to take his exact same strategy, his exact same rules, and apply them to the 4-hour chart. Nothing else changed. Same entry criteria, same risk management, same stops, same targets, just a different time frame. And here is what happened. His win rate dropped. It went from 72% down to 58%. He was winning less often, but his profit factor, the ratio of his total wins to his total losses, tripled. It went from 1.1 to 3.4. How is that possible? Because on the 15-minute chart, 70% of the moves he was trading were noise, random fluctuations. When he won small. When he lost big. Because he mistook the market's breathing for setups. They looked like setups, but they were not real structural moves. They were just volatility pretending to be opportunity. And when you trade noise, you win often, but you win small. And when you lose the same size or bigger. Because noise does not respect structure. But on the 4-hour chart, 80% of the moves were real. There was less manipulation, because real order flow was happening there. They were backed by institutional flow, by actual market structure, by momentum that had weight behind it. So when Marcus won, he won big. And when he lost, the losses were clean and controlled. He went from breaking even to making consistent profit, not by finding a better strategy, by filtering out the noise. Here is the truth most traders do not want to hear. The 5-minute chart is 80% noise and 20% structure. The 4-hour chart is 80% structure and 20% noise. You cannot build a career on noise. You can get lucky. You can have good days. But you cannot compound. You cannot survive long term. Because noise will eventually grind you down. It will exhaust you. It will make you make mistakes. It will push you to be impulsive. It will make you question your strategy. And it will steal your capital one small loss at a time. You may be trading on 5-minute charts right now. Gradually move your time frame up. For example, let your new lowest time frame be the 15-minute chart. Do not deal with anything below 15 minutes, and raise this over time. You will witness your consistency increase, because you will be exposed to less and less noise. This will positively affect your trade quality and your psychology. Technical confirmation. Touch versus respect. This is where amateurs and professionals split. Amateurs see a level and they act on touch. The price touches a support level and they buy. The price touches a resistance level and they sell. Immediate, reactive, and most of the time, wrong. Because touching a level is not the same as respecting a level. Actually, they know this deep down, but they cannot avoid acting impulsively. Professionals do not trade the touch, they trade the respect. And respect takes time. Let me explain what I mean. When price approaches a key level on the 4-hour chart, professionals do not enter immediately. They wait. They wait for the level to hold across at least 2 4-hour candles. That is 8 hours. 8 hours of the market proving that this level matters. Quite sufficient. 8 hours of buyers or sellers showing up and defending that zone. And only then, only after the market has shown respect, do they enter. They have no need for rush. They do not have the idea of chasing as if they are missing the opportunity. They can miss the opportunity. But they have already made peace with this possibility, because waiting 8 hours for confirmation is not hesitation. It is confirmation. Amateurs think they are being fast and decisive. They assume if they are not among the earliest to enter, they cannot make money. They act with haste. But in reality, they are just impulsive. They confuse speed with skill, and the market punishes that confusion. When you trade the 5-minute chart, you do not have time to wait for respect. Everything moves too fast. You must decide immediately. And most hasty decisions are impulsive. A level gets touched and you have seconds to decide. And in those seconds, your amygdala takes over. You see movement and you react. But when you trade the 4-hour chart, you have hours. Hours to watch. Hours to think. Hours to decide. Hours to let your rational brain do its job. And in those hours, most of the fake setups reveal themselves. The ones that looked perfect on the 5-minute chart fall apart on the 4-hour. And you avoid them. Not because you are smarter, because you gave yourself time to see clearly. So if you want to be sure you are managing a trade correctly, raise your time frame. This gives you an advantage to maintain your discipline, because you have more time to think and decide. So you do not need to rush. You act rationally, not impulsively. And as a result, you manage your trades better and become emotionally more stable. Capital preservation, the power of doing nothing. Meet Sarah. She was a talented trader. Good eye for setups, solid risk management. But she was overtrading. She knew it. She was aware, but could not give it up. So we ran another experiment. For 1 month, she tracked every setup she wanted to take on the 15-minute chart. But she did not take them. Because she did not take the trades, she would interpret the results of those trades more accurately because there was no emotional attachment to those trades. She just wrote them down. Entry. Stop. Target. And then she watched what happened. At the end of the month, she had recorded 87 setups, 87 trades she almost took. And we analyzed them. 63 of those 87 setups, 73% would have stopped her out. They looked good in the moment. They met her criteria, but they failed. They were noise disguised as opportunity. If Sarah had traded all 87 setups, she would have had a horrible month. But because she did nothing, she preserved her capital. And capital preservation is the most underrated edge in trading. Because here is the thing. Every trade you do not take is not a missed opportunity. It is a potential loss you avoided. And avoiding losses is more valuable than chasing wins. When Sarah switched to the 4-hour chart, she took 14 trades that month. 14. Compared to the 87 she would have taken on the 15-minute. And of those 14, 9 were profitable, a 64% win rate. But more importantly, her profit factor was 2.8. She made money. Real money. Not because she traded more, because she traded less. And she traded better. The 4-hour chart forced her to be selective. It removed the noise. It removed the impulsive setups. And it left her with only the trades that had real structural backing. She had become more patient. And the patience paradox says this: the less you trade, the more you make. Because quality beats quantity. Every single time. You can get different results by applying the same strategy to a different time frame. So a strategy that does not make you profitable on the 15-minute chart might be exactly what you are looking for on the 4-hour chart. And when you apply most profitable strategies to higher time frames, your win rate will increase. Move your 5-minute entry pattern to 15 minutes and test it there. Test your 5-minute strategy on the hourly and see what opportunities the same strategy offers on different time frames. If your strategy is mechanical and clear enough, it can be applied to any time frame. If my 5-minute entry strategy works better on 30 minutes, why would I trade on 5 minutes? Definitely test your strategy on different time frames. A strategy that is not profitable on one time frame can be profitable on another. The identity shift. From trying to being. Here is the mistake most traders make when they try to switch to higher time frames. They say, I am going to try the 4-hour chart. I am going to test it. When we start this way, we give ourselves a chance to go back. To be honest, if traders have a choice, most will prefer to trade on the 5-minute chart. Because most traders are not trying to become profitable, they are trying to satisfy the addiction trading offers them. If you start by saying, I will see if this works, you will return from that path. Because the 4-hour chart will not give you the dopamine you are looking for. You will not feel like you do on the 5-minute. And you will go back. That is the wrong approach, because trying is temporary. Trying is conditional. Trying leaves the door open to go back to the 5-minute chart the moment things get uncomfortable. So you will not try. And this will be uncomfortable because the 4-hour chart is boring. It is slow. It leaves you starving for dopamine. You will sit for hours with nothing happening, and your brain will scream at you. It will tell you that you are missing opportunities, that you should be doing something, that the 5-minute chart has 3 setups right now, and you are sitting here doing nothing. And if you are trying the 4-hour chart, you will give in, you will go back. But if you are a 4-hour trader, you will not, because identity precedes behavior. Every time. Your identity is not what you do. Your identity is who you are, and who you are determines what you do. If you are someone who tries the 4-hour chart, you will fail, because your identity is still a 5-minute trader testing something new. But if you are a 4-hour trader, you will succeed, because everything you do flows from that identity. You do not check your charts every 10 minutes. Why would you? You are not a scalper. You no longer need to do this. You are a 4-hour trader. You do not feel impulsive when you see a 5-minute setup. Why would you? That is not your game. You do not get bored waiting. Why would you? Patience is your edge. This is part of the job. This is not semantics. This is how behavior change actually works. You do not change your behavior and then become a different person. You become a different person and then your behavior changes automatically. So become a trader who trades higher time frames. Identify key levels and set alerts there. After the alert goes off, follow whether your setup forms on the 4-hour time frame. If your setup forms, take the trade. That is it. You can be much more profitable by dedicating very little time. Make this your identity. Here is what I want you to do. If you are serious about trading the 4-hour chart, stop saying you are trying it. Decide right now that you are a 4-hour trader. Not testing, not experimenting. You are. And then make your environment match that identity. If you are a 4-hour trader, you do not need real-time alerts. You check your charts twice a day. Morning, evening. That is it. Lock your trading terminal. Set a rule that you cannot open a trade unless the setup has been on your watch list for at least 8 hours. Make impulsive trading physically difficult, and make patient trading the path of least resistance, because your environment shapes your behavior more than your willpower ever will. To give an example from myself, my bias for the upcoming week is mostly clear before the week even starts, and so are the levels where I can apply this bias. I set alerts at those levels, and if those levels come, I look for my setup. If my setup appears, I take the trade. If it does not, I continue with my life until the alarm goes off again. That is all. Raising the time frame you trade on is one of the most logical steps you can take on the path to becoming a profitable trader. An approach that can shorten the process if you really want to shorten the journey to becoming profitable. Yes, it is an approach that does not sound appealing at the same time. But remember, most of the time the things that change everything and work do not sound appealing. You do not want to do them willingly. But when you do, everything changes dramatically. So do not listen to your comfort. Raise your time frame. Not exposing yourself to a 1-minute chart anymore is already a good step. If switching directly to high time frames feels difficult, start with small steps. If you are looking for entries on the 5-minute time frame, switch to 15 minutes, and then to 30 minutes. Continue progressing this way. As you raise your time frame, you will see that everything is easier and you will be convinced. Here is what I learned after years of watching traders try to switch time frames and fail. They do not fail because the 4-hour chart does not work. It works. The data is clear. They fail because they try to be a 4-hour trader while still thinking like a 5-minute trader. They want the results of patience without the identity of patience. And it does not work that way. You cannot act patient. You have to be patient. And being patient starts with deciding that is who you are. Let me tell you what happens when you actually make this shift, when you actually become a 4-hour trader. First, your stress disappears. You are not glued to your screen anymore. You are not watching every tick. You no longer need to. You check in twice a day, and that is enough. Because the 4-hour chart does not move fast enough to require constant monitoring. You do not need to be at your screen constantly. No fear of missing the trade. Your stress levels will drop. Second, your clarity improves. You see the market differently. You stop seeing every little move as an opportunity. You start seeing structure, real support and resistance, real momentum, real setups. Your emotions are not dominant, and your capacity to interpret the market correctly increases. Third, your capital grows, not because you are making more per trade, but because you are losing less. You are avoiding the noise trades, the impulsive trades, the revenge trades, and you are only taking the setups that have real edge. And over time, that compounds. Not into huge monthly returns, into consistent, steady growth. The kind of growth that lasts. The kind of growth that builds careers. Here is the final truth. The 5-minute chart feels like trading. It feels active. It feels like you are doing something. But feeling productive does not bring profitability with it. Trading is different from the jobs we know. Feeling productive is not the same as being productive. The 4-hour chart feels like doing nothing. It feels slow. It feels boring. But boring is where the money is. We have learned this now. Boring is where the professionals operate. Boring is where you stop being a gambler and start being a trader. So stop chasing the excitement. Stop confusing activity with progress. And start building the identity of someone who does not need constant action to feel valuable. Because the market does not reward activity. It rewards accuracy. And accuracy requires patience. And patience requires time. And time is what the 4-hour chart gives you. Use it. I know for most people the idea of trading the 4-hour chart does not sound appealing. If you are scalping and do not want to quit, at least adapt your strategy to the 4-hour and also take the trades it offers on the 4-hour and keep a log of this. Observe the results, observe your process and how easy trading becomes. The results will convince you.